All right, good afternoon, everyone. Today is June 7th. It's Thursday, June 7th, 2012. You're looking at Dwayne's charts right now because Dwayne had the charts in the live trading room this morning. I had something going on and I was tardy. So Dwayne put some trades on this morning in the live trading room, and Dwayne will go over his trades, and then I'm going to grab the charts and I'll go over everything else that happened in the markets this morning. Okay. For those of you who have not taken a free trial with us, go to www.cfrn.net/apply. If you are on the free trial, you should have something in your email with the current offer that we have out there for you. Reply to that so you can get into the partners meeting tonight. We have a partners meeting every Thursday night at 9 p.m. Eastern Time. So for all the partners that are out there, there you have it. We have a partners meeting tonight, 9 p.m. Eastern Time. All right. Okay. To you, Dwayne.
Okay, we ended up with the YM up 35 points and the S&P 500 up 1.5 points. And I stopped putting on trades in the YM and the ES at that point. We continued to look at trade setups, but every day when we come in to do the recap, we show trades that made money and trades that got stopped out. And some days there's a net positive, and some days there's not. See, when we're in the live trading room each morning for 2 hours, okay, we have an obligation to the partners and to those taking the free trial to take as many trade setups as possible to simply show you the trade setups, because we want you to understand what it is we're looking for, what the criteria is, and then everyone wants to see us pull the trigger, good, bad, or indifferent. Today I approached it a little bit differently. I'll show you what the trades were in just a second. But after we had this positive results, I said, okay, now that's it. Because if you're trading for your own account, when you have those kind of numbers up for the day, whether you're trading one contract or 100 contracts, my advice to you is that it needs to be part of your business plan that you get up and you walk away. And I'll show you a really good reason here in just a second. In fact, let's go to that chart right now. We'll take this down, and we'll take this down, and we'll roll over to the 10,000 contract where we were executing trades this morning. Okay. The first trade I took, this pullback here, I didn't quite have my charts up and running yet. I had an issue. And so there was a point to be had there, a point to be had there, but I didn't actually execute that in the live trading room. The one I executed was a long at 1327.75. It was our standard trade setup. It ran up 1 point to 28.75. I chose not to take profit there. I had a 2-point bracket on the trade. That thing went back and forth and back and forth and back and forth, and it gave us numerous, and we talked about this in the live trading room, and the market will often do this. It gave us numerous opportunities to get out at or near break even if we wanted to, because this thing just started to just flatten out. Okay, it lost its zest. It lost the appeal that it had when we originally got in. I mean, it started to lose it right here, literally as soon as we got in, because of the way the MA1 was behaving. But we were in it, and I said, guys, we'll go ahead and we'll let this run out. Now, right here, look at this steep drop. Okay, I'm going to show you something, and then I'm going to take it off so it doesn't confuse you. Where we're sitting here in this trade, it goes a point in our favor, and it's back to break even. It's a point in our favor, it's back to break even. It's down a little, all of that. And then we printed one dynamic resistant dot right there. You see that right over the green candle? Let me open that up a little bit. There. You see that? Once we printed that red dot, I said, I believe my exact words in the trading room were, uh-oh. And on the next candle, whoosh, just fell away. Hit our stop, we're out of the trade. Now, we used a 2-point bracket on the trade. So once this happened, I didn't have to make any kind of emotional decision. Oh man, maybe it'll come back. You know, maybe I should give it room to breathe. It's a yoga thing. It's not a trading thing. All right. So we're out. We were minus 2 points on the ES. Then price comes down. Got a nice little bearish cross here. We bounce off of dynamic support. See how price comes down, hits the dynamic support, comes up here. Picture perfect entry to the tick. No real drawdown whatsoever. And we had this nice, powerful, bearish bar that came right down to this dynamic support. Because of the forceful nature of this bar and how quickly it developed, this is a 10,000 contract chart. Okay, these 10,000 contracts traded like that. Okay, there was no lingering, no back and forth, just boom, the bottom fell out. Okay, I said, let's see if we can break that dynamic support. We did. We exited that trade with a 3.5 point profit. But we were down 2 points from our first trade. 3.5 minus 2 leaves you with 1.5 points. That's whether you trade one contract or 100 contracts. Look here at the bid and the ask. It's 500 on the bid, 300 on the ask. You can trade 100 contracts right there, and you don't have to worry about not getting filled or getting slipped. The liquidity, you know. Once you get over 100, maybe you need to start being concerned about it. But anything less than that, you got more important stuff to worry about. And that's like, and such as ending the day on a positive note with 1.5 points. Okay? Now, the trade continued down. Was there more in the trade than what we actually took? I believe there was a little more in that trade. But we hit a weekly trading zone, which I've already shown you over here on the hourly chart. See, right there. And as soon as we hit that, the market bounced right back up. Here. Now, I said I'm not going to trade anymore in the ES. We were down 2. We picked up 3.5. So we're net positive 1.5 for the day. We're good with that. I highlighted the next trade that came along. We didn't actually trade it in the live trading room, but we highlighted it. We discussed it. Had we taken it, we would have gotten stopped out by 2 ticks, I believe, which would have made us back to negative 0.5 point on the day. Now that trade ultimately went in our favor. Okay. However, with a 2-point bracket, you would have been stopped out. So I highlighted that. This one I didn't highlight, but as you can see, this one you would have not gotten stopped out, and it would have produced 19.5 down to 17.5. It was about 1 3/4 points to be had out of this little move had you traded it, but we didn't. This was another shorting opportunity that we did not take, and guess what? That would have stopped out. Okay. Then it came back and gave a long position, and that long entry would have been at 13.20, and it ran up to 13.2375. Okay. But again, that's a long trade. Made a nice profit. We didn't participate in it. We already had our profit for the day. Now let me show you really quick here. We did take a trade on the YM in the live trading room. And that trade was put my zone up there so I'll know where that was. 12,475.
Yep, 475, 480.
Well, 480. Okay, 475, 480. So this is the trade that we took right here. Bearish cross, pull back, right down to the zone, and look where it turned. Now, keep in mind, guys, these weekly trading zones, they go out to the partners before the market opens on Monday. And then they don't change. They stay the same all week. This is the YM. Price came down, hit the zone, and bounced from 75 all the way up to 516. Now, we didn't take that trade because we had made a very nice trade right here, going from here down to the zone. And look at what price has done. And this is on the Dow, the YM. The zone, bounce, zone, bounce, zone, bounce. And here we sit. Okay. Back to the 1 hour, we're still bouncing off that zone. And this little trend line. Okay. So that's pretty much it. We had 3 trades total. Well, we had that one NQ when Michael popped in at the end. He did an NQ thing. I don't trade the NQ myself, so we ended up down like 2 ticks or something on the NQ. But just show it so you see it. We had 2 trades in the ES. We were down 2. And then we had a trade for 3.5, so we ended up 1.5 points on the ES. The YM, the total there was 35. Okay. All right, Michael, I guess at this point you can take the camera,
All right,
the screens, and finish up whatever you would normally do.
okay. I will do that. There we go. Everybody should be looking at my charts now on screen 2. All right. Dwayne just went over everything on the ES, so I'm not going to do that. All right. I'll go over the NQ stuff and some 4-tick range YM stuff. This is the NQ on the 4-tick range. All right. I did not take any trades this morning on the NQ. I was actually just considering taking a trade here on the ES, but I'm going to hold off for right now. All right, here was the open right here on the NQ. All right, we had a bearish cross, MA1 down below the BBC. Price pulled up, tested the BBC. Down here on the bottom, you see we had some bearish divergence right there. The green moving away from the red. All right, on the slingshot. So what we're looking for, when you get this bearish cross right here, you're looking for price to come back, pull back up to a resistance area. The resistance area is identified by the BBC, this green line. Once it hits that area, you're then looking for price to close back down in the direction of the original trend. All right. Now you're assuming down because the MA1 crossed below the BBC, and you have bearish divergence. It's bearish down here on this indicator when the green pulls away from the red and blue. The red and blue is the cycle portion of the slingshot. All right. So your entry on that would have been right there, right here. Okay. Now let's see. The same stuff happening again and again. You know, I'll point it out to you guys. I don't know how many people are in here for the first time, but I'll point it out again and again. Right there was one. You see the bearish divergence down here on the bottom as price is pulling away to the BBC, and the BBC is showing acting as resistance. Okay. So, you know, entries there. You could have just gotten in here and stayed in till there, but if you chose to get out, you know, to move your stop or whatever the case may be, then you're in until right there. Now right here you weren't looking to short because you didn't get it down close. Price went through. Once it went through, everything reversed down here. Okay, so you would have been looking to get long right up there on the up close. Okay, right there. Oops, sorry about that, guys. Right here on the up close, you would have been looking to get long. Obviously that didn't go very far. You may or may not have gotten something out of that, depending on what your risk was. I usually use 8 ticks risk, which is really not much at all on the NQ. Now over here you got your bearish cross again. Price started pulling away from the BBC. It pulled back up, tested it right there. Same thing again and again and again. Okay. This is what we're looking for our trades. All right. What you don't want to see is the cycle portion pulling up against you like this right here. Okay. Let's see. Right in here there was another opportunity. Right here there was no opportunity on the long side because the price didn't turn blue and start going back up until it was way down below. But right here you can see there's your divergence. There's your pullback to the BBC with the down close. Over here, you wouldn't have taken this trade because the cycle was moving up. Same thing over here. Nothing right in here. Right in here, you may or may not have taken that. I probably wouldn't have because the cycle was red and headed down. I don't know. I didn't take any trades this morning because I wasn't there until the very end. Right here you can see, if you did take this, you would have lost 8 ticks. Okay, it's as simple as that. One thing that I was pointing out this morning in the live trading room when Dwayne had put a trade on, once the price gets below the MA1 on the NQ, it's usually going to stay below the MA1 and run. If it starts to get back up above the MA1, like over here, it's usually going to have a pretty deep pullback. All right. Right in here, this would have been a losing trade. Right here. That right there would definitely have been a losing trade. You got your up close, you had a blue cycle, you had bullish divergence, you would have gone long right there and it stopped out right there. But then it just reversed and gave you more opportunities. Right over here, for instance, I'll just use this arrow. Right there you had bullish divergence and up close for the move up. Over here you had bullish divergence, but the cycle was moving down, suggesting it was going to come down. And this is about when I came in this morning. Dwayne, I think, had put on a short over here. Okay. This is about when I came in this morning, and Dwayne had asked me if I would have taken the long right here. The cycle was moving down, red and moving down, so I don't think I would have. Not that I did. But over here we got short this morning. Dwayne got short. He took 2 trades on the NQ. This was the first one. He got short right here. And once it got down below the MA1, he had some pretty good profit in it, but he moved his stop. He moved his stop to +1 tick. It stopped him out at +1 tick. Now, over... Where did we get? We got short again, or long, or something. Over here we had bullish divergence. Here it was. Over here we had bullish divergence. And Dwayne got long right here this morning, okay, with the bullish divergence. And he ended up moving his stop at the wrong place. When he was applying his stop, he accidentally got stopped out for, I think it was -3 ticks total, because we were +1 after that other trade. And he ended up -2 ticks on the morning with the NQ. But you can see it did actually move up here. We were anticipating it getting up here to this swing pivot, but it would have stopped out to the tick right here at 25.48. The next move down did not give an opportunity. The next move up did give a nice opportunity right here. Okay. So with the bullish divergence right there on the NQ, we're now into the break anyway. But with the bullish divergence right there, it moved up nicely. And we're just getting into some choppy area right here. Right? But that was the NQ on the morning. Okay. Now I'll go over the 4-tick range on the YM. This is the first time I've looked at the YM, but I'm guessing it's going to look a lot like the NQ. Okay. Let's see. What time is it? 12:36. Okay, I'll push this along. We didn't have any bullish divergence in here. All right. We didn't have any bearish divergence in here. No bullish divergence. Here we finally had some bearish divergence. Cycle was headed up. You may have gone short right there. though it would not have been optimal because you see the cycle is blue and headed up. Obviously it turned around and it went up. There was an opportunity to get long right there, take some profit on that. It got choppy in here. A little tiny bit of divergence down here, but when this is actually setting up, you don't know when it's going to turn. You just know that it's divergent. All right, so it pulled up, tested the BBC, and gave a down close right in there for the move down. Did it again over here, but the cycle was moving up, so I wouldn't have taken that. I wouldn't have recommended taking that. It was diverging right here, same thing, but the cycle's in the middle, so I wouldn't have done that either. Right here, this would have been a nice trade right here. All right, on a grade that would have been like a B+ trade because the only thing that turned on you was the MA1. Does anybody have any questions about any of this stuff as I'm going through it here? You see, we're looking for the divergence down here. We're looking for the MA1 to cross below the BBC, pull back up to it, and then give the close. All right. So you're trading in the direction of the momentum once the momentum has shown itself. Okay. Let's see. You can see it just happens over and over and over again all day. So what Dwayne was talking about earlier, if you come in the morning and you put a trade on, and like his first trade on the YM, he made 35 points on. You know what? Why are you going to put yourself through watching it all day long? Just take your 35 points, shut the computer off, go have a coffee or something. Or, go do whatever it is you enjoy doing. You can see in here over and over again the same things happening again and again and again. Now right here, this would have given you a little bit of profit, but it did move up. This one right here, you see it was a little choppy right in here. It would have just given a little profit. Over here. Does anybody have any questions about all this? I don't see any questions being typed in, so I'm assuming you guys all know what's going on. It's the same setup over and over and over again. And there you have it. All right, that was the morning. Whew. All right, it is 12:39, and I'm sure Mike Reed's in the house, so I'm sure he probably doesn't have a lot of time. Actually, Mike Reed's not in the house anymore. Mike's gone. All right. Well, anyway, I'm going to wrap up the recording right here. Again, if he had to go, is that what he? Okay. If anybody has any questions about anything, email us at support@cfrn.net. If you are in here on the trial and you want to become a partner and you don't know how, email us again at support@cfrn.net, or just type it in here right now and I'll send you all the information you need. If you are a partner, there's a partners meeting tonight, 9 p.m. Eastern Time. And okay, and I'll show it to you really quick, Mike. Okay, because I know that you like to trade that. It was just the divergences, the divergences and the pullbacks. There were a bunch of opportunities this morning. Here was the first one, second, third, fourth, fifth. This one probably would have stopped you out. 6th, 7th, 8th, that would have stopped you out. 9th, 10th, that would have stopped you out. 11th, 12th, 13th would have stopped you out. So how many times have I said that? 4 out of 13 so far?
I lost track.
14 right there. 14 trades. Out of 14 trades, I think 2 of them would have gone nowhere and not given you any profit potential. Actually, 1 of them would have gone nowhere and not given you any profit potential. Most of them would have given you a good deal of profit potential. You can see this right here. Yeah, only 1 of them actually didn't give any profit potential at all. The other ones, you could have managed your trade to take the risk off, reduce your risk, as profit was put into the trade and price got on the other side of the MA1. All right. That said, you can watch the recording once I put it out into the onto the website. I was saying partners meeting tonight, 9 p.m. Eastern Time. Everyone who's in on a trial right now, if you want to become a partner, you should have an email with all the information. If you don't, email us support@cfrn.net. All right, now I'm going to stop the recording. You ready, Dwayne?
Ready.